Good morning, everyone.
Good morning.
And you're welcome. So maybe I should always decide because it's not Sunday. All right. So you're welcome once again to our seminar for this quarter, which is on finances. And like we said, part of being a believer also is God wants us to prosper spiritually, financially, and also health-wise. So that's why we try to go through all of this, because we need to navigate our world. We live in the world. No, we are not of the world, but we live in the world, and we need to understand the basics of how to live our lives and how to manage our finances, because our resources, God gave them to us. He gave them to us, and He wants us to make sure that also, because we are stewards of those resources, and the way we manage our resources also, it impacts our lives, it impacts other people around us as well, and that's where today, one of the most important things that we normally deal with in America today is our credit. You know, somebody said you need to know you have debt to get money. so America is this whereby the way you finance your money and debt everything, your credit plays a significant role in your finances, and we'll learn more about that today. And the second part, we'll learn just about the 4 principles of money, and we'll talk about maximize, and we'll talk about that in the second part as well. And before we start, I just want us to just bow down our heads and just pray quickly, because we're in God's presence. Lord, we thank you for today. We thank you for the grace to be able to be here once more and to learn once more. Lord, we know that you want us to prosper spiritually, financially, and health-wise, the way we prosper spiritually. And Lord, we've come here to learn once more about how you want, about finances, how to be good stewards of the resources you have given unto us. Father, minister to us today, speak to our very mind, and cause us to open our eyes to see the riches that you have for us through resources you have given unto us. In Jesus' name we pray.
Amen.
So without wasting much time, I want to introduce our guest speaker today, Tawanda Box. She's the CEO of Elosina. If you are on Facebook, or if you are even anywhere in the community, you know her very well, because she's very active and she does a lot of good work in the community, and we are grateful that we have you here today. So thank you very much. The church, can you please welcome her?
Thank you for having me here. And believe it or not, this is my first time actually presenting at a church. So I was excited about this opportunity. And because I'm in the house of the Lord, I wanted to actually start off with prayer as well. So if you can bow your head. Heavenly Father, we come to you before you today with grateful hearts, thanking you for this day and for this opportunity to gather in your name. Lord, you are the source of all wisdom, and we acknowledge that every good and perfect gift comes from you. As we begin this session on financial literacy, we ask for your presence to be in our midst. Grant us open hearts and clear minds. Help us to understand not just how to manage money, but how to be faithful stewards of all that you have entrusted in us. Mm-hmm. Teach us, Lord, to honor you with our finances, and our giving, our saving, our spending, and our planning. Remove any fear or shame tied to finances, and replace it with confidence rooted in your truth and your provision. May this time be a blessing to every person here. Let it plant seeds of wisdom that grow into freedom, responsibility, generosity in every household represented. I ask for your guidance as I speak with clarity, compassion, and purpose. May all this be shared today be used for uplifting of your people and to glory of your name. In Jesus' name we pray.
Amen.
So today we're going to talk about credit basis. And I am very open and interactive with all the workshops that I do. So if there's a question, please raise your hand and I can answer that question for you, or you can wait to the end where we can do active Q&A as well. Okay, so we're going to talk about credit basis, but we may go a little bit deeper. Who am I? I am the owner of Elosina, which is a consultant firm here in Rochester, where we do a lot of financial literacy, business education, mentoring, coaching, and things like that. So my goal is to personally empower entrepreneurs and small business owners for education, resources, and expert guidance, and building strong foundations, strategic growth, and credit solutions. That's me in a nutshell. On a personal level, I have 5 kids, a new grandmother, I've been in Rochester almost 30 years, so I really love this community. So today we will discuss credit reporting agencies, ways to improve your credit, non-traditional credit, ways to protect your credit and your rights as a consumer. Okay? So, there's a lot of problems when we think about credit and what makes up your credit profile, okay? There's patterns of late payments or current debts, past poor credit performance, bankruptcy, judgments or liens, past due or collections account, charge-off, foreclosures, and repossessions. Many of you may know this, maybe personal, or you've heard of it, or you know someone else. But these are various things that make up your credit report and what makes it a problem. So this is shocking to a lot of people. A lot of people don't realize that there are 79% of all credit reports have errors on them. 79%, that's a high number. Does anyone know what those errors can be? When we think about your credit report having 79% of errors on it.
False car accident reports.
False what?
False car accident reports.
False accident reports?
Yeah.
Okay, I can see that. I can see that. It can be the spelling of your name. It can be your date of birth. It can be identity theft. It can be your current credit card reporting late, right? And you paid on time, but it didn't get to the credit agency on time and it's reported late. There's so many factors that go into a perfect credit report, but nonetheless, about 79% of all credit reports have errors on them. And that's why it's important to look at your credit and understand what's going on. So, if you have a problem, there are things that you can do. I always tell people that you should get a copy of your credit report free every single year and know what's going on. So one of the first things you want to do is order a copy of your credit report and your credit score. You want to know where you are. You do want to correct any errors on that credit report as well. Don't ignore them. Address the common credit problems that I mentioned before. That can be the wrong address that's listed for you, that misspelling of your name, misspelling of your middle name, various things, your social security number, things like that. You want to manage your money and get help if needed. Okay? Establish credit history if you don't have it. Okay? When you want to watch your debt, avoid and handle identity theft. This is a big one because a lot of people ignore that. You know, we get a lot of junk mail, you know, from credit cards and other companies that are trying to give us new credit. And a lot of times we just take it and toss it and put it in the garbage. People that love to steal identity, that's what they love to do. Dig through your garbage and take that information, open up new accounts. So I always tell people that you can opt out of being solicited or you shred that information, okay? And if you do have a complaint, it's your right to file a complaint that you've been violated with consumer protection. Okay, so what is good credit? You know, what do you need good credit for? A lot of people don't realize, they think the basic stuff to rent or buy a home, you know, a car and stuff like that. But it's a little bit more than that. A lot of people don't realize that they get high interest rate because they may have poor credit, poor or bad credit. In a lot of cases, to even get a job, okay? To lease property. Utilities is a big one too. A lot of people don't realize that when they first get utilities in their name, they have to pay deposits or higher deposits and things like that. They don't understand why, and a lot of times it's because it's your credit, right? One of the other things that I learned too about Rochester is that if you live here in Rochester, the utility companies actually, you give them more permission than you think just by providing them utilities. And what I mean by that, I can recall when I first moved here to Rochester and got utilities in my name, when I was reading through the information where they needed my credit, I didn't realize I was giving them authorization to share my data with the school district and the police department. Any pretty much city entity, you give them permission to access your account, right? So it's important that you read the fine lines on a lot of documentation. But utility services is one too. Insurance is a big one too. A lot of people don't realize insurance is not just a factor of where you live, your age, and things like that. It also depends on your credit too, okay? Any questions at all as we go through this? Yes, go ahead.
Yeah, just the one question on the slide before. How do you opt out of
Receiving the junk? Yeah. Most of them have on, when you get the solicitation in the mail, at the bottom there should be a toll-free number or address where it says to opt out of these pre-selected approvals, yes.
Thank you.
You're welcome. Okay, so where do we find our credit scores? A lot of people don't even realize that we have more than one type of score that exists, right? And we have various types of credit reports. Most people know of the basic three, the Experian, Equifax, and TransUnion. There are a lot more of credit reports that exist on you that you have no idea. Okay, you have your consumer credit report, which most people know about. You have your in-file credit report. You have a residential mortgage credit report as well. So a lot of times, and what I mean by that is a lot of times when you look at your credit report or your credit score, and you just say one FICO score may show that you have a 700 score. However, there's a different type of FICO score for your mortgage, right? There's various type of FICO scores that exist. And there's other types of credit reports that exist. So another example would be if you want to open up a bank account and just say the bank said, no, you can't open up your new account. It's not necessarily because they looked at your credit report, right? They probably looked at your in-file report that exists. And that could be like LexisNexis, check system, if you heard of that. You know, like if you wrote bad checks and the bank closed your account, that's a different credit agencies that exist, okay? So you have to know the various types of credit reports and what agency is pulling what. So you can have, on your regular FICO score, you can have 600 credit score, just say 650 credit score. But you go to apply for a new car or something like that. When those agencies pull your report, they pull a different type of FICO score because there's a FICO score for auto as well, right? So you have an auto, mortgage, regular consumer scores as well. So you need to know what scores goes where. Okay, as mentioned before, everyone is entitled to a free credit report. Do we all know that? If not, please know that you're entitled to a free credit score and report every single year through annualcreditreport.com. Okay, so go there, get your annual credit report, and they do pull from those the three agencies that I mentioned before. Okay, and then we also offer free credit monitoring as well through my organization. So if you look at the sample here of the Experian credit report that exists, you'll notice it looks pretty busy. But this is where you get to start identifying all the errors that exist within that credit report. Okay, so when you first get your credit report, you want to look for anything that's inaccurate on there and you want to dispute it or challenge it, okay? You want to look for identifying information. You want to make sure that your name, your address, your employer, everything is correct on there, right? You want to examine your credit information and make sure that the credit agencies that you have that account with, that it's reporting correctly. You want to make sure that it's the right account number. You want to make sure that you paid on time and that it's reflecting on time as well. You want to look at that public information and see if it's true and accurate, right? You don't want to have bankruptcies listed on your report if you actually did not file bankruptcy and things like that. And the inquiries that exist, right? You want to make sure that everything that is showing on there is as accurate as possible because I mentioned before, mostly all credit reports have about a 79% inaccurate C on it. Then you want to also understand your Vantage score versus a FICO score. Have we heard of them? Have we heard of a Vantage score? But you have heard of a FICO score before, right? Okay, there's a big difference between the two and a lot of people get confused. Have you heard of apps like Credit Karma and things like that? Credit Karma shows what's called a Vantage score. A Vantage score. What is the difference? It's a huge difference between the two and they actually compete. Your FICO score is the most commonly used score. This is where lenders, creditors, auto dealers use this score to decide if they're going to lend you money or not and at what interest rate. There are many FICO scores that I mentioned before from your mortgage, auto, and things like that. And every industry uses a different model. So that's why you see so many variations of your score. The mortgage industry uses the older version of FICO so that it's more restrictive, and that's why your mortgage score is lower than your regular FICO score. Now your Vantage score is what you're going to see on those Credit Karma apps, okay? Vantage Scores was developed by the three major agencies that exist, the Experian, Equifax, and TransUnion. This credit scoring system is a competitor of FICO, and it's considered a consumer score. This is the system used by most credit score monitoring companies except FICO and Experian. This is why you see your scores to be much higher on those credit apps, okay? And I always tell people, do not make financial decisions based off those Vantage scores using those apps. We see it a lot. You may be using a Credit Karma app, and Credit Karma is telling you that your score is 750. Then you go to apply for a home loan or a different type of credit card, and when they pull your credit report, it's actually 630, okay? Whereas they don't use the Vantage score. So do not make financial decisions based off a Vantage score, unless you know that that particular lender is using Vantage scores, okay? And they tend to be much higher than what your actual FICO score is. Yes?
I got a question. Do evictions affect your credit score?
If it's reported, it does. If you had an eviction and it went through the courts and became a judgment or something like that, it does affect it if it's placed on your credit. It does. All right, so what type of accounts are shown on your credit report? Of course, individual accounts, if you do have a joint account, if you are an authorized user on someone else's account, your payment arrangements that you may have, your installment accounts, as well as your revolving accounts. These are the various different accounts that are showing on your credit report. So, what is your score based on? Now, this is where it gets a little bit tricky because a lot of people play this game of trying to balance the perfect score. There is so much involved in this. So, it's based on how much you have borrowed, who you borrowed it from, how well you repay your debts, and how you're handling your current debts, and how long you have been managing it, okay? It's a combination of things, how you get to that perfect score. And this is where people struggle with when trying to maintain that high credit score, okay? So, if you look at this, the breakdown of it, you have your payment history, your outstanding debt, the length of credit history, your credit types, and your new credit. That's what makes up your credit score. So if you look at that, you'll see that 35% of your score is your payment history. That's why if you miss one payment, your score drops drastically, right? Your outstanding debt is at 30%. The length of credit history is at 15%. The credit types is 10%, and new credit is the last 10%. So what I see a lot of people do that's trying to increase their credit score, they'll go out and get 9, 10 different type of credit cards. That's not really impacting it much because it's only 10% of your score. Whereas it goes by your credit type, the type of accounts, right? They want to see that you have installment, revolving accounts, and all of these various types of accounts, and that you're maintaining it correctly, okay? And most importantly, that payment history, that and outstanding debt, that's what matters. Yes?
So just a quick question. I see that you have credit there. So if a person opts out of getting new credit and just focuses on paying their, I don't know, electric, their mortgage, maybe their phone, and maybe they're paid off or they're trying to pay off their credit card debt. Let's say they don't have any credit card debt, but they only have those daily. Does that make their credit score lower because they don't have?
Not necessarily, because that's only 10% of the new credit. That's only 10%. Okay. No. But if you already have all of the various types of the installment and revolving accounts, you just maintain those and continue to pay on time, and you have them over a length of time. That what helps your score go up, but not adding a new credit card or anything like that. Might jump up a couple points, but not much. But you see a lot of people keep going out, oh, let me get another credit card because my score is, at a certain threshold, so you can qualify for another card. It's not going to impact it as much. Having 20 different credit cards is not. However, if you had, various types of credit cards and then you went and got an auto loan or mortgage, that's going to drastically increase that score as well. Because you have a different type of account.
But in order to qualify for the mortgage or the auto account, they need to see that you're paying
Exactly.
something.
Exactly. that you're maintaining the other types of accounts in a good manner. Yes.
I'm various banks, and the banks show my FICO score. The question becomes, why is that when I go for an auto loan, my FICO score is not high, and whatever I see on the credit report that I get from the bank, because I was surprised to see it was even higher than what I was expecting. I don't know where they put all the information from when they go to high school than I have.
That it was higher?
Yeah.
Because they pulled an auto loan FICO score for you.
Oh,
That's different. Like I mentioned before, there's various type of FICO scores that exist. So when you're applying for an auto loan, they're looking at your FICO auto score. The same as mortgage. So if you apply for a mortgage loan at that same bank, they're gonna look at a different scoring system. Yes?
When you order a credit report, does it show those different types of credit scores of all?
It does not. You have to order that specifically. That's just like when you order your credit report, it doesn't necessarily come with your FICO score. You have to order your FICO score to know what that is as well. Question back there.
There's something about available credits. For example, let's say for my credit cards, I can get up to like 100K, but I only spend 2K, which means I have an 8K credit to compared to if I have only 10K of available credit, I only spend $2,000. I spend 20% of one, 2% of one. What's the difference between those two?
So I'm sorry, you have one with a higher balance.
Let's say we have two different people. One person has 100K in all their credit cards combined, and if only spend $2,000 of it, which is they have 98% available credit. The other person has only $10,000 available credit, but they spend $2,000 of that, which is 20% of their available credit. How does that impact?
So they're both spending 20%.
Yeah, no. One is spending only 2%.
2%, and the other one is spending 20%.
It's the same amount, but different available credit amount.
Yeah, the difference would be basically not necessarily just the debt to income ratio, but it's also like a lot of times when we tell people when you're applying for credit or you have credit, try to stay with under a certain threshold. Most people use 30%. As long as you use 30%, you'll maintain your score staying on the upper side compared to what lenders would see. You know, if you spend that 80%, they're like, oh, like they like to max it out and pay slowly over time. So the difference between the two is that the person with the higher limit that only spent the 2% actually is in a better financial situation compared to the person with the lower amount spending a higher percentage of that, right? Most people go by 30%, like only, spend within 30% on those credit cards, but I always tell people about 10%. Right, and so that's the lower amount that you utilize on those credit cards, the better actually. That's what lenders like to see, that you're not maxing it out. But if you do, that's okay too. But a lot of times they like to see that you have the ability to pay it back every month. Okay? Yes.
Spending less amount of your credit card still affects the credit score.
It absolutely does. If you max out your credit card, at the reporting period, when it's time for that credit card to report, it will show that you maxed that credit out. And again, if we go back to what 30% of your credit score is based on your outstanding debt. 30%. So if you max that credit card out, and when it's reporting to the credit agencies, that score is going to drop drastically. Okay? 30% of that. And if you pay it late, if you max it out and paid it late, you've hit two different categories. So it's going to really take a hard dive on that score. Yes?
So what does, when people have, let's say that person has maxed out their credit card and they're only paying that minimum amount every month, does that keep your credit the same? Does that make your credit lower?
No, your credit is going to decrease because it's impacting the outstanding debt that's owed. It's going to decrease, but continue to pay on time. Right? So because you're maintaining your payment history, but it's still going to decline because it's outstanding debt. Okay? All right, so here's the score that they look at, right? Between 300 and 579, that's considered a poor credit score. Between 580 and 669, that's fair. 670 to 739, that's considered good. And then we get into the red categories, which is 740 to 799, very good. 800 to 850 is considered excellent, okay? So if you're on the left side here, you need to work on a couple things, right? And it might not necessarily mean that you have paid late, bad debt, or anything like that. You know, people that has no credit and doesn't believe in credit, never utilize credit, they fall in those categories, okay? But this is what the score is broken down to. Okay, so, that if you have the inaccurate things on your credit report, you do want to solve those credit problems compared to ignoring it. That's the worst thing that people can do, and we see it all the time, thinking that it's going to go away. It's not. It's not going to go away. If you have these credit problems, follow the instructions that are provided in the letters that you received. You want to send any additional information if you do have that. And a lot of times it's okay to explain the problem in a brief letter. You can put a statement on your credit report as well, okay? It's okay to do that. You want to contact the creditors directly if needed. And a lot of times if you know a certain situation is going on personally, you can contact your creditors and explain to them. Sometimes they can redo your loan, they can push your payment back, they can do a lot of things as long as you communicate with them. But if you ignore them, that's a whole different story. Okay, as mentioned before, you can write a consumer statement if needed to be on your credit report, whatever that may be. I was ill, hospitalized for a month, I have a sick child, going through a divorce, you know, whatever it may be, so that creditors can see something has happened to you, you experience life in some shape, form, or manner, and they can understand what's going on. You need to hire a professional if you don't understand or if you don't feel comfortable with the process as well. And different ways to improve that credit score, like I said, always correct any inaccurate information. You want to always pay your bills on time, minimize outstanding debt, open new accounts only if it's needed. Again, you don't need to have all these various different credit cards unless there's some big bonus and perk for you to do that. You know, I do know people that has multiple credit cards for various reasons, right? They have one because they want the airline perks, another one that has the gas perks, the cash back. It's various things that they do it for, so that's understandable. Use credit cards responsibly and reestablish if you have to. It's simple. You can reestablish over and over and over again until you get it. Yes?
Does your mortgage debt affect your credit score?
Absolutely, it does. Yes.
So that you're paying like monthly?
Yep, your mortgage loan does report, and it does impact your credit score as well. Yep, just like a car loan. And a lot of people don't understand. They have that car loan, and then they're excited that this is the last payment. Now they paid that car up. That's a debt that they no longer have. But what happens when you pay that car loan off and that account closes? What happens?
Your credit drops.
Huh?
Your credit drops.
Your credit score drops. Why?
Less debt?
No, not necessarily less debt. It drops for a couple reasons. Now it's going to report as a closed account, and a closed account on your credit report is considered negative, right? A lot of people get upset, like, I've been working years to pay this car off, and now it's closed, and my score dropped 50 points.
Yeah.
It's a closed account, right? So I tell people to strategically, plan, because again, it's playing cat and mouse with that credit score and how to maintain it, right? But there's ways around that to kind of keep that score up there too, okay? Yeah. Yeah, so here are some things when we talk about credit that you don't necessarily see. Your rent and insurance payment typically do not report on your credit. Yeah, go ahead, Abinisa.
So it is better to leave, like, I remember I had a credit card account that I finished paying off it and I closed. And in my credit card. So is it better to just hold it and don't use it?
Absolutely.
Or use it here and then pay off?
Absolutely. If you do have an open credit card and you no longer want to use it, just let it sit there. I mean, if the company decides after a certain amount of time they will close it, that can happen as well because of the inactivity. But you closing it is a different story, right? Because it will affect your credit score, because anytime a closed account is listed in your report, it's negative. A closed account is negative, okay?
I do have a student loan, and it still affect my credit.
Yes.
Like seriously?
Wow.
Yes.
Close a lot of
A closed account is negative. Yes.
Do collections eventually fall off your credit report after a certain amount of years?
They do, typically 7 to 10 years. But here's the thing: when they get closer to aging off, these agencies are smart. They'll sell it to another agency to keep trying to collect money from you and keep your score down until you pay it off. Yes, some do fall off and they'll come back, but some of them, when they get close to aging off that report, they sell it to another company. They do. They do. So like I mentioned, rented insurance typically is not showing your credit report unless you get evicted, somehow don't pay it, send to collections, then you will see it there. Your gas, electric, and other utilities typically don't show in your credit report, again, unless you do not pay. It goes to collections and things like that. Child care or child support payments do not as well. Child support payments can be seen on a credit report if child support payments are not paid and it's reported to the credit agencies, okay? There are some things that you can do to help secure credit. You can open up secure credit cards using your own funds, and you can use accounts like revolving accounts such as Self, Kickoff, and other financial institutions that help people reestablish. Now, have you guys heard of Self or Kickoff? Okay, Self or Kickoff are other temporary loan accounts that you can use for a short period of time. They are secure. So, for example, you open up a Self account or a Kickoff account, just say $500. It's your own money, and what you would do is pay it back, $25 payments over time, and what that does is help you boost your credit scores and your credit report. The thing is, these are termed accounts. So if it's a 6-month payment thing that you're on, in 6 months, you're gonna pay that off, and then it's gonna be what? A closed account. That's gonna go back down. So these are good to use if you have a temporary situation where you're really trying to boost that score right away to get whatever it is that you're trying to get, but keep in mind, these accounts will close, right? So you have to be mindful and strategic with how you utilize those. And I do see people open up account after account after account to do that, which keeps going on. They keep doing it so that score doesn't stop. But I tell people be strategic and look at other options to do that. I would not necessarily do it, but again, in some cases, some people do. You can take, using those same loan, Self, and Kickoff accounts, you can open up a secured credit card as well instead of that. Those are options as well. Okay, so identity theft. Again, it's very, very important. Don't just toss that mail in the garbage, stuff like that, shred it. You always want to avoid, prevent, and handle situations, right? So you want to avoid only provide your social security number when it's needed. Be cautious with personal information, shred documents, keep mail safe, store personal information in a safe place. A lot of people do not avoid common mistakes here, and it's very important that you do that. You want to prevent, don't carry unnecessary information. I can remember when I was 18-year-old and my mom gave me my social security card first too. I just kept it in my purse all the time. As I learn more, it's not really the best thing to do. So don't carry unnecessary information if you don't have to. Create unique passwords. Pay attention to your billing cycles or the credit reports annually, and opt out if you don't want to be solicited, okay? Handle. You want to contact companies where fraud has occurred. You want to contact fraud departments of credit agencies, and you want to contact the FTC. You want to file a police report and keep records of communications. I know in a lot of cases, like I have helped a lot of my immigrant sisters and brothers and stuff like that has experienced a lot of identity theft. One of the main things that I've seen with some individuals, especially with the same January 1st birthday, a lot of them have the same birthday, very similar names. And so it's been a lot of filing of police reports to prove that this person was not the cousin, or the names are, very, very similar, same date of birth and things like that, right? And so that's why it's very, very important to pay attention to this and to not avoid it, but to handle Okay, and know your rights. That's important too. Prevent discrimination by companies that give credit. Require credit companies to give reasons for denial. If you're denied, you are by law required to get that reason for denial. Require credit companies to answer consumer questions if you have any. And again, read more on the consumerfinance.gov website. I would also say that on the website, if you do have any accounts and collections and things like that, where you get these random people that send you mail that want you to pay or settle on a debt, you can go to the consumer website and see if that company is actually legally able to collect funds from you. And the reason why I say that because Consumer Finance and FTC does have a long list of agencies that by law they cannot collect funds from you. For whatever reason, they have disobeyed the law and various reasons, but there's still a lot of companies out here that are trying to collect funds from a collection standpoint that is not even authorized to collect. So I tell people, if you are in collections, go to their websites just to see if those particular companies are on there. Yes?
And if they are on there,
Then you don't have to pay.
Okay.
You can contact the Consumer Finance and actually file a complaint that this particular company is trying to collect funds from you and not authorized to do so. Yes?
What is the best way if you see a wrong information on your report? Many years ago, there was a hospital that my brother go to get and we paid their money off. But when we moved to Rochester, they reported they come on board by another company. I don't know whether they didn't keep their books. They said we didn't pay. It took us a while for us to get that report.
It's from a hospital?
Yeah, from that.
And actually, it's easy to get hospitals off because they're violating HIPAA violations.
Yes.
So we can talk about that too offline if it's still.
What helped us that we had record of the bank information of all our payments. We had to send them before they moved. But they bought it from another hospital. So I think the first hospital did not record that we paid.
So is it recorded on your report that it's paid or no?
No, initially it was recorded that we haven't paid.
Oh.
It was later on when we questioned it and we provided what we needed. But it took them a while for them to remove that from our report.
Oh, so it's off now though?
Yeah.
Okay, yeah. I wish, if I had known about this when it was happening, we could have fought that right away. Yeah, because a lot of.
So many years ago.
Yeah.
It was
Yeah.
years ago.
It's, in a lot of cases, it's easy to get hospital bills off due to HIPAA violations. Yeah, yes.
So I had a credit card company when I was trying to build my credit. Well, I found out that these people were just trying to, like, later on, even when I paid, they would say, oh, I didn't receive payment. Something always happened. They always, like, not receiving the payment. So they always mark the payments as, like, late. And then this went on for some time. I called the customer service. They gave me the right answer. So I wrote a letter to the company. And then they took it off my credit, but then I couldn't find any traces of me having that account. It's not going.
Mm-hmm. Sometimes when you dispute stuff, or sometimes when you dispute stuff, by law, they have 30 days to respond. If they don't respond within 30 days, it's actually deleted from the agency, right? So that could have been the case too, especially if it was reporting wrong. So a lot of times when you report and dispute things with the credit agencies, by law, they have to respond to you within 30 days. And if the company that you have the account with don't respond to the agencies within that time frame, by law, the credit agency has to remove it. And that could have been the case.
Remove all the issue.
Mm-hmm. Yep. Yes.
This is a confusing one. What if you have a spouse who you're separated from, continues to open up credit cards in your account? You're still legally married, but getting divorced, but not divorced yet. Would that be fraud if your spouse opens up an account in your name, uses your name, your social?
Absolutely.
That would be fraud even if you are married.
Absolutely. If you didn't authorize it, absolutely. If you're not a signer on that joint account, absolutely.
So that would be a legit.
I can't do anything. I'm legally married. I cannot sign on behalf of my husband. He has to sign. I cannot open up accounts on behalf of my husband. We both have to do it.
Right.
Yes.
Right.
So So you can dispute that as well. And identity theft. All right, so again, you have options, and the options should not ever be ignored. Again, pull your credit report. I can't stress that enough. We recommend you can use Smart Credit or any other the annual credit report, but get a tri-merge report where you can look at all three reports and compare all three. All three are different, simply because, and a lot of people don't understand it either. Some people will be like, I pull my TransUnion or Equifax score, and I see different scores, or one is reporting here and not the other place. That's because not all agencies or account holders report to all three, okay? Not all of them do that. So that's why you'll see the difference in various reports. You want to identify anything that's inaccurate, okay? Find those inaccuracies that exist in your credit report, and you want to start disputing that, okay? Dispute inaccurate information. You want to send letters to the credit bureaus or your creditors to fix those errors. Yes?
Maybe related but not related. Have you ever had to help people who've been scammed?
Yes. Yes.
Okay. I just didn't know. I was watching something on Netflix, and it seemed like they were stuck with a lot of debt that I don't know what they did with it, but long story short, they married someone who kept saying, I have bad credit, let's get this in your name. And they kept getting this debt for their spouse in hope that they were building something together that will, and then when they told their spouse, I'm not getting any more credit in my name, they left. But left them with all that debt. So,
yeah, this day and age, you have to be very careful with a lot of stuff, and especially with the advancement of technology and AI these days. You have to be very careful and mindful when you're giving it your information or opening up other accounts on your behalf for someone else. Those individuals that I work with that are new to credit and just starting off and being authorized users and co-signers, you have to be very, very careful doing this for other individuals, right? There are some cases where I do recommend. So for example, let's just make up a scenario. You're in the home buying process and your lender wants you to have, I don't know, an additional 50 to 100 points on your credit score. They really need you there so that you can get the best interest rates possible. You have a relative, a parent, someone in your family that has an 800 plus credit score, and they have had accounts for 50 plus years, right? And you have a great relationship. Sometimes it's okay to have that conversation with that individual and say, hey, can you add me on one of your accounts as an authorized user? And that would instantly boost your credit score as well, because now you are added to an account that has a 50-year history, and this particular person has great credit. You're gonna get some of that credit, right, in that length of history, because if you recall on that slide that we talked about that credit score, it's based off of those factors. So in a lot of cases, I do tell people, have that conversation with a loved one about you being added as an authorized user to their account to help you boost your scores. And a lot of times I tell the other people who does allow other people to be authorized users, like, look, you can add them, but don't give them the credit card. You continue to manage it, right? Don't give them the credit card, you're just gonna add them as a user. I've done that for my own children to help them have high credit scores now, okay? Now, when it comes to you co-signing for people, it would have to be Jesus himself to ask me to co-sign because I'm not doing it. That's just me personally, but I don't do it. I haven't done it for my own children as well. My parents didn't do it for me. So I come from that space because education is very important. No, I'm not co-signing, but I will help you try to get to what you're trying to get to as best as I can. What can we do to help you get there? And the reason why is because I don't want that burden on me and my credit, right? In case something would happen, that's gonna fall back on you. It's gonna be your responsibility. You know, like I said, I've added my children as authorized users on my account ever since they was young, like 14. And when they became of age, I have not had to co-sign for anything, for their first cars, their loans, first apartments, anything, because by the time they were old enough, they had well-established credit. Only thing I had to do is be a reference at the most, but I wasn't co-signing. Yes?
I just heard what you said, and I thought it was interesting, the adding them as a user but not giving them credit. Is that a better option than opening up? Some parents open up credit
well, a couple of things. They can't open up an account in a child's name
Well, you can.
because they're not old enough. They can open up a bank account or something like a debit card. That's different,
Okay.
but not a credit account.
Okay, that's
They can't. Yeah, they can't. Unless they're doing something crazy, because you have heard of parents opening up account in kids' name, yeah, utilities and stuff like that. But they cannot do that because they are not old enough to even have credit, right? But maybe a savings or a saving or a checking account in their name to do that and have them manage that account with their own card. Yes, that's possible. But when they're underage, some credit cards allow you to do that as young as 14, adding them as an authorized user. Right. And then teenage years, you know, you can give them a card and just, you know, here's $100, you use it responsibly, you teach them financial literacy with that and see how they manage it. But for the most part, other people that I have in the past added them as authorized users. I added them just to help them reach their goal, but I did not give them access to my cards or anything like that. Okay?
Excuse me.
Yes.
Yeah, I have 2 questions. The first one is on, I will sign a loan.
Mhm.
Is it possible after you have done that to remove you from?
Can you be removed?
Yeah.
You can. Then that person likely would have to refinance or something like that. Yes, absolutely.
The second one, is there any relationship between the credit company and insurance company?
The credit company and the insurance company?
Yeah.
Is there a relationship? That's the question. I don't necessarily know if there's a relationship, but if you're applying for insurance, they do pull your credit.
Yeah, that is what I'm
Yes, they do pull your credit. So, like whatever insurance quote it may be, it can be life, it can be auto, it can be home, they do pull your credit. In a lot of cases, that's why some people have high costs of insurance, because credit is a factor in this case.
There was a time I tried to insure my car, and I called one insurance company. They said they can't insure it because of my children. They have
Yes.
friends.
Yes.
So
I have a child at home that's a speeder, and yeah, it does cost, right? So it wasn't her credit, it was her driving record, right? So it's various factors that go into that, the cost of your policy. On the business side, it also impacts too. Like I said, I've worked with quite a few business owners that work in a particular industry, the construction industry, that was, when they first started at their businesses, they were trying to get bonds for their company. And the price of the bonds was outrageous simply because they had bad credit. They couldn't even afford to purchase the bond for their construction company. Right, so we have to work on the credit, find certain types of insurance agencies that work with people with bad credit so that they can still afford bonds for the companies to be able to do business. So it does have a huge impact on that, okay? Here's my contact information. If you have any further questions, I'll be here for a while. We can talk more if there's any specific questions that you may have. You can also scan that QR code that goes directly to my website if you do need some type of financial literacy or service that we provide. Please do reach out to me. Cell phone numbers there, I'm very open, flexible, text, call, it doesn't matter, or send me an email, okay? That's what I do every single day: financial literacy, credit repair services, education, all the things. So feel free to reach out if you do have any specific questions, okay? Is there anything else when we talk about financial literacy or education that I did not cover that you're curious about?
Question.
Yes.
So I know you said opening like multiple credit cards can enrich your credit because it comes as like new credit and stuff. But let's say you've missed payments and then payment history is down. And then you have one credit card that is now reporting on-time payment. Does it make sense to open let's say 3 to 4 more secured or even that self account, so that now you have multiple accounts reporting on-time payment to get that payment history or those kind of things?
No. So if you have a missed payment or a late payment, it's going to report. As long as the account's still open, just get it back in good standing, right? Opening up multiple new credit cards is not really going to impact it much, if anything. Well, if you do the secure self-type accounts, it may increase, but not drastically at all. Because again, you're opening up, we're looking at the type of credits, right? Where that's 10%.
Yeah, I know it's gonna hurt the overall credit, but just the payment history part.
Yeah, it's not gonna overshadow that. No, you're still gonna have that late payment reporting. And so opening up new accounts where it will show that you have that perfect account, that's still going to exist, but it's still going to have that little bit of an impact because you were late on that other account. Yes. So opening up new account is not necessarily going to impact it as much because it's the same type of account for one, and it's still reporting late. Yes. Okay. And again, this, like I mentioned before, this is kind of, it's hard to balance, to be honest with you. But for the most part, like I have people in a lot of cases, especially in the home buying process, when they realize that their debt to income ratio is not the best to qualify for that mortgage loan. And the first thing people say to me, can you get those darn student loans off my report? Right? Because most of the time, in many cases, that's the one that's kind of preventing them from getting the best mortgage loan or interest rates because of that student loan. My first thought is no. Why would you want to do that? Any idea why that's a bad idea?
Close that house.
No, not necessarily closed. It can still be open.
Type so.
Because most people who have student loans are paying 30, 40 years, you know? Depends. Because of the length of credit history. Most of those student loans have been reporting for 10, 20, 30 years for a lot of people. Why would you want that off? Huh?
They don't fall out.
If it's still open, no. But if you have this account for 20 plus years, why would you want that off? That's the oldest reporting account. You just got your credit card 5 years ago, whatever. If you get that off your report, your score is gonna really plummet. So I tell people all the time, no, you have to be creative. We have to be creative because your debt to income ratio is not working. So what can we do to fix that, right? But getting your student loans off is never a great idea for several reasons, not just because of that. Because another thing is because now you have a government loan, student loan, depending on where it's reporting. When you are trying to seek a mortgage loan, again, they use a different type of FICO score, right? And they have different systems that you have no idea that they're utilizing. They still see that you have these government loans. So it's like you're hiding it on paper, but they know it exists. So don't do that. And it's not true, right? So you don't want to do that for several reasons. I would go over here first, yes.
Just a quick question about student loans. How do they determine for student loans? Because I think a lot of people who are maybe they're starting out as students don't really have a lot of credit. Like what are they using to measure how much they can give you? Or do they just give you what the education will cost you?
Yeah, that's based off a couple things. Based off the students' financial, if they're young, I would assume in most cases it's their parents' income that they're utilizing to create their financial aid package. So they're awarded whatever they apply for FAFSA.
Okay.
So it's based off of that. Like, I can only use my example, and every case is different. Like for me and my children, they based it off my income, what they were able to get in loans or funding or anything like that if we wanted to take that option and not pay cash.
It depends on the family income.
Okay.
And even with that, with the FAFSA, subsidized, there's a subsidized loan that goes at his name. Depends on the family income. So a family may get a huge amount of money, but maybe because of the income, they get just $5,000.
Absolutely.
And the rest will be how you know that way.
Okay.
They have what for the 10 class loans and those kind of stuff that they're gonna have to work in your name if you want to do that. Support your kid, which what is your name. So if your kid refuse to pay that, it is in your name.
Exactly. And every case is different. So like in my oldest daughter case, what she did, I financially paid for her tuition. I paid for that. But what I did do to help her and her credit, I made her towards her last year in at Howard University take a small loan so that she can have that on her report. Right? I just made her take a $5,000 loan to pay her own tuition, right? And that she's been doing that on her own. Because I was like, I'll pay for your tuition. You got to do something out of this, right? So to help her with her credit, in addition to that, you know, I wanted you know, an education loan or her report to show over time. Yeah. Yes.
So, my question is relating to the student's loan. So, if I understand you correctly, not paying off everything, I also help you boost your credit history.
Not paying off, it's kind of weird though. It sounds weird, doesn't it, right? Because it's like, why do you want to hang on to debt and you have that ability to pay? But it's kind of like that because what creditors want to see, they want to see that you can maintain revolving accounts, installment accounts, and that you have a great history. That's what they really want to see. I mean, if you do have that financial means, pay that mortgage off, do it, right? Even though it's going to reflect paid and closed, you pay that mortgage off. However, if you want to maintain that score, you just have to be strategic about how do you keep that score up there, right? Like, you know, this is going to be your last auto payment loan, and then that account is going to close next month, and my score is going to drop 50 points. What can you do? A lot of cases, it's simple things. If you had a great history with your credit card companies, and your credit card limit is $5,000, you can simply call them, hey, I've been at $5,000 for 10 years. Can you increase my credit limit to $20,000 or $10,000? Now, what's going to happen is, just say when you had that $5,000 balance at first, you only had spent, just say, $500 off that credit card. Now you got this $20,000 limit they gave you. What happens? That your utilization rate goes down because now you have more credit available, and that score goes up. See what I mean? So it's various things that you can do, just like little things to make a difference, right? But if you have the ability to pay that mortgage off, that auto loan off, do it. Because you're saving yourself money and interest rates and all those other things that goes into that. But again, if you're so concerned about that score and you have something else, a new mortgage coming or new business starting, just be strategic in how you're going to navigate that drop of score that's going to happen. Yes.
Is it financially wise to get a personal loan to pay down the credit debt?
To pay your debt down? That's a great question. Every situation is different. You know, in other words, it sounds like it's almost like a consolidation. Like you consolidate. It depends. If you are in the space where different accounts that you have has very high interest rates, and it's keeping you in this cycle, and if you can do a consolidation loan with good interest rates to pay that off, I would say do it. But again, every case is different. You have to look at your whole financial picture, okay? If the various accounts you have high interest rates and all these other things, and you're just about maxed out and it's not going anywhere, consolidation can be a good thing.
That is still going to be reported as a new credit.
Yeah, it's going to be a new account. It's going to be a new account, but the thing is, you're going to get all those other debts paid, and that score is going to increase, right? And now you have this new loan that you're paying back with better interest rates and things like that. So in a lot of cases, that is okay to do. But now, if you're consolidating and the interest rates on it is 35%, 40%, no. You have to make it make sense, right? And another thing too, a lot of people, you see it all the time too, and I tell people this, it's not a great idea, but I do understand it, with those payday loans. A local company here, just over COVID, I can't recall, but I think it was they grossed over $5 million. Right here in Osage County. One company. Predatory lending for people with bad credit. And what happens with that is that people get in these payday cycles. You go get the payday loan, you get your paycheck, you go pay it back. But now you can't afford to lose that $1,000 that you just paid back. So you take it out again, right? And they stay in that cycle. And they just make crazy money out of it. Crazy money at 35% interest rates and things like that. This shouldn't even be illegal. But there's an organization, and if someone needs it, that does help in the state of Minnesota, help people pay those payday loans off so that you get out of those cycles, okay? So you have to be very mindful of the predatory lenders that are out here, the buy here, pay here's, and places like that. In a lot of cases, people have to use these organizations because they have no other choice. And there is another choice. The other choice is fix your credit. Fix your credit. Yes.
I've been doing a lot of research on fixing my credit, and so what do? I go to TikTok or YouTube, and I see these people making these TikTok videos say, never, ever, ever pay off a collection that was sold. They say, don't do it. Why wouldn't you do that?
It depends. If the collection is reported on your credit, there's a couple of things. Every situation is different, I'll say that. So if you do have a collection on your report, I don't necessarily tell people to do that either right away. If you're gonna pay it, I tell people, request a pay per delete. I'll pay you, you delete it. If not, we're just gonna dispute it, and then it's more work to go through. So what I do, just so you know, what I do through my credit report agencies, I would say 99% of the people that come to me with their credit, everything on their credit report is accurate. Now, even though I said 79% that is inaccurate, that is true, but most 99% of the people that come to me, the debt that's listed is true. Meaning they did not pay it, they got that repo, they got evicted, all of these things. So I don't dispute with the credit agencies that, oh, this is not Charlie's debt, delete it. I don't do that. That's not what we do. What we do at LOCINA is we dispute the law. Because again, 79% of errors exist on an account, right? So that's what I dispute. What we dispute is what's called through Metro 2, which is basically, in a nutshell, it's stating that by law, these collection agencies and credit agencies must report negative accounts or all accounts in a legal manner in a certain way. And that includes everything. If you have the wrong number, if you have anything wrong. So that's what we do. We do Metro 2 challenges. So we fight the law with the law. And a lot of times that's how we get things removed. I never go to an agency and say, this is not Charlie's account, delete it. No, because that is Charlie's account. What I'm disputing is that you're reporting it inaccurate. And majority of the time they delete it. There are some times where they do come back like, oh, you're right, let me fix it, right? And they fix it, and now we're at a different place now. Now it's like working with the agencies, okay, what can we do to get this account to report positive? Can we do a paper delete, right? Can we settle? Can we, we look at different options that exist.
If you settle for a lower amount, can you also request a delete?
You can always request it. That doesn't mean that they're going to do it, right?
But don't pay it until you agree to delete, right?
So if you request a paper delete and they say, yeah, we'll do that, you get that in writing first. Get that in writing first, what you agreed to, and then you can pay it and then you will delete it. Okay? If they don't, then you send that letter where they agree to that to the agencies, and then they'll remove it. Yes. But, yes.
So, can you negotiate, like I didn't know if the first scenario is where, let's say somebody owes, I don't know, X amount of dollars, and then the people calling, like the collectors will say, well, if you're willing to pay this amount today, then we'll cancel whatever that bigger amount is. Does that doesn't have to come from them to you, or can you also say to them,
Yeah.
I only have
You can always
this
negotiate.
much?
You can always negotiate. But here's the thing when you negotiate. A lot of times, especially if it's still going to be reported, but
Yeah.
they're reflected as paid,
Yeah.
it will show paid for less or
Yeah.
settled
Yeah.
on your report. Now, there's positive and negatives with that. The positive is that you paid it, but you agreed to it. But other creditors will see that you had a responsibility on a debt and you refused to pay it. And you gave them $100 on a $10,000 loan.
I see what you're saying.
They likely will lend you money because you paid for less and settled. Okay? It just all depends on the creditor. But they will see, and they do report that it's paid and settled. That would mean that you did not pay the full amount. Yes.
Just a quick one. Does a credit company have access to your personal savings?
Do they what? I'm sorry?
Your credit company have access they have access to your personal savings?
Do they have?
No. Do your creditors have access to your personal?
Yes.
No. No. Okay, so with that question, I guess, The only way they would have access, in my mind, if you gave them the authority to do like auto pay or something. Otherwise, if you don't pay them or anything like that, they do not have access to your accounts. Now, the only time any institution can have access to your accounts is if you have been through the court system where there's some sort of seizure in place, right? Where they can seize your accounts.
Does that happen often?
It happens all the time.
Does it?
You can have debts where people ignore it, they've been in court, seizures are in place, they will freeze your assets. Yes, it happens, it does. Most likely in credit cards, no. Unless it's a higher amount, like hundreds of thousands, yeah. But likely no.
T-Mobile.
No,
$1,000.
absolutely. T-Mobile will just hunt you forever. T-Mobile will hunt you forever. They're the type that will send you to collection, sell it to another collector. Yeah, they'll keep going. AT&T too.
But you think they'll seize your account over that? If it goes,
No.
they won't take you to court for $1,000
No.
cell phone bill?
No, I haven't seen it before. Anything is possible. Now, you do have some creditors out there that has the time and the money and the resources to do it. But I highly doubt it's going to cost them more in court fees and things like that. Another thing too, when you're applying for credit, because this is true, there are some creditors that do criminal background checks, right? I've seen it happen before. Individual had I think it was a Macy's credit card. You know, when you're out and about, they try to get you to sign up at the cash register for instant 30% off plus a new credit card or whatever. I knew an individual that got a new Macy's card, did some shopping, same day, got the discount. A month later, Macy's sent them a letter saying, we're closing your account, give us our money back. Come to find out they had a criminal background. Some lenders do not lend to if you have a certain criminal background with certain types of charges. That's why it's important when you're applying for credit and things like that, that you read what those fine prints are. Now, at the instant, they approved them because their credit score was good and they did qualify, but then most likely in a lot of those cases, they do a thorough background checks over that period of time when they mail you the card in the mail, right? And in some cases, criminal backgrounds go into place too. And so they closed their account, and it was a battle of, fighting those charges. Yes.
Can you talk more about certificately paying off your debt based on the interest rate? Like, because my daughter has a car loan that has 0.99, even not even 1%. Trying to pay off, I said, don't. Try to pay your higher credit, your higher rate, higher before you even type it, because this is 0.099, not even 1% interest rate.
Yeah.
So can you talk more about paying off your debt that is based on the interest rate that you have?
Absolutely. So if you have a credit card or any kind of debt with higher interest rates, you want to approach those first because of the interest rate you're paying itself, right? So it's always wise to create a plan to pay off the higher debts first before you get to those with lower interest rates and lower debts. So you always want to approach those first to get that credit down. Absolutely, that's what you want to do. That's what you want to do. And in many cases, you always want to get the best interest rates as possible, right? But if you are in a situation where you have higher debt with higher interest rates, that's always the goal to get that down. Now, if you're in a great situation and have a great relationship with the creditor, a lot of times it's a simple phone call, like, give me better interest rates. Why do I have these sucky interest rates? What can I do to get better interest rates? And a lot of times it's, let me take a look, But be mindful of that too. Just like the example I gave where you can call your creditor and say, hey, increase my credit score. Some of them will do it, and some of them will check your credit before they do that. And if they check your credit, what happens? You get a ding to your credit report, right? So I tell people too, be mindful because your credit increase impact that too, right? When we had that other slide about the increase on your credit report, right? That goes into fact too. So a lot of people, like I mentioned, that are in the category of getting 10, 15 different credit cards. Every time you apply for something, you get a hard hit to your credit report, and that makes your score go down. Especially when you're in a car buying time frame. And you go to an auto dealership, they pull your credit, you left there with your score dropping 100 points, and all you did was apply for, auto loan. That's because most auto lenders, when you come in and apply for credit, they send it out to 1 million people and say, hey, who wants to lend Charlie money? So now you have all these different banks on your credit report, and it's like, I didn't apply for a loan through Capital One. I didn't do this finance, I went to Toyota local place, right? So now you're stuck with that. And then you're even upset if you didn't even get a car you like, right? So you're even mad. Now your score's down a lot of points and you have all those inquiries. So you have to be mindful of that. Every time you apply for credit, it's a hard hit. Okay, so be mindful of that.
So it's better to get the loan from the bank before you even go to.
If you have great relationships, I always tell people go directly to your bank. Go to your bank. Don't apply at the dealer. My car experience, I got a loan from my bank, they gave me a check and I took it there. There you go. I'm not dealing with all this, 50 different hits on my credit. No, my bank did it. So if you do have that great relationship in your bank, you're better off at your bank.
I think one of the things that you can also add the auto loan company, they have a specific, like if you go here, the Honda here, they have only one place, the Honda Financial Services. So it's just only one that they have. But as you said, some of them will send it to everyone.
Yes.
So that would be a question you have to ask.
Yeah, before you apply, you can ask them. Well, you can tell them too.
Yeah.
Like, only send this to Capital One Auto Finance, or only send it, and they will do that. But for the most part, because they're eager to get you a loan, they want to give you an approval, so they send it to everybody. And the first person that comes back, oh yeah, we got you approved for $50,000 and this interest rate, Yes.
I was just thinking about everything you said, and I wondered, career-wise, are there certain careers that if you want to go into, they'll look into your credit history?
Absolutely. There's a lot of positions. If you are in higher level positions financially, financial institutions, if you oversee high budgets, things like that, yes, they do. Yes, they do. Mm-hmm. I mean, can you imagine leading, a $10 million organization and you have bad credit? That's just like some places where you have to drive. Yeah, that's just like. Yes.
Yeah.
I mean, it's just like you get in a job as a truck driver and you don't have a driver's license, right? Same thing. So, yeah, like I said, a lot of organizations do, depending on the position and how high level you are, they do check your credit. Yes. Yes.
Can I use if I find an error on my credit report, can I use that as leverage to fix the other things? Let's say I have multiple missed payments, and then they report extra missed payments, and I use that and say, okay, because you reported this wrong, take the rest off.
Not necessarily. You have to attack different things that are wrong. Right, so it's not a matter of because you reported this wrong missed payment, now delete everything. No, not necessarily. I mean, because everything else is reflecting correctly besides that one missed payment. So you have to attack that one. But if there's multiple things, then you have to attack each and every one of them. So it's not a matter of, hey, you spelled my name wrong, so delete my whole credit history. No, they'll fix your name and make sure your accounts are okay. Yeah.
I think, I don't know, I may be wrong, but missed payment is something you should not do. Personally, I think that even if you can pay the minimum, pay the minimum. You don't have to miss pay.
Absolutely. If you cannot pay your account, your balance off in full every month, please make sure you pay at least the minimum. If you don't, 35% is depending on that. 35%. Bare minimum, pay that. Bare minimum. If you can't pay it, call your creditor and let them know, hey, something happened. Can we push this payment towards the end? Whatever it may be, but pay bare minimum. If you could, like I said, go to rule. Most people say 30%. I say 10%, 10 to 30. And the reason why I say that, because some people's financial situation is different. I always tell people, try not to spend if you can't pay, really, right? So if you really can't afford, if you go max out a $10,000 credit card this month, but you really can't pay that, that's not your income for the month, why would you spend that? That's I guess the space I come from. So that's why I tell most people between 10 to 30%. All right, any other questions? All right, well, I thank you all. Like I said, here's my information on this last screen here. So if you have any questions, please do reach out. And I appreciate you guys having me today. Thank you.
Thank you so much for that. We really appreciate it. One thing that we'll probably spend some time on, because there are a couple of other things that we need to talk about finances, is fraud, dealing with fraud. It's becoming very rampant these days. And we really have to educate ourselves on how to not fall victim of that. So that's one thing. Also, we talk about loans. So not today, but in the future, these are things we'll be looking more into, especially fraud. It's becoming so much today. It looks so legitimate. You think it is, and there are many things that you need to get into your finances. So let's take like a 2 minutes break. We'll be back quick, and there's some other part I want to talk about quickly. So 2 minutes, and then we'll be back.
There's coffee and snacks, if that's what it was.
Let's come together. I know we have let's come together. After the service, we'll continue this. Hello?
Oh, sorry,
Let's come together. So there is something quick I want to cover. It's not going to take so much of your time, but I feel that it's very important as we do this. How do you maximize your money? You know, we said that most of the time it's not about how much you make. It's about what you do with it. Because you can make so much money. I mean, there was a time in a year that I was talking about how much we made, and we had 0 in savings. It's like, okay, what's going on here? Because, and you can make very little, but whatever you do with it is so important. So just some quick things that you might get. Now, there are 4 things mainly that we do with our money most of the time. The biggest one is we spend, and that's where many of our money, that's where it ends. We spend our money every time you get a paycheck. They say you live from paycheck to paycheck most of the time. I'm not saying it cannot happen in our lives. There are times for everything, but it should not be a norm whereby everything that we have here, you spend every single dollar that you have. It's never a good idea. Second one is you save some money, you invest, and then you give. These are the things that mostly categories of what we do with our money, and we go to each of them one by one. The first one is spend. Now, spending on needs versus wants. This is one of the biggest challenges that we run into. Oh, Mrs. is doing sales. I have to go to Mrs. Sales. Now, there are things that are needs. Basically, is living, a house to live. Maybe you need a car, and you don't have to buy a fancy car. Sometimes you need a functional car. Also, when you buy your house as well, if you cannot afford a bigger house, buy a smaller one. Even when you rent, because somebody said something that really got me. He said that we have one problem. We think that when we have a very nice car, we think people will respect us. But here's the funny thing: when people see a car that is coming, they are admiring the car, not the person inside. Does that make sense? They admire the car, and then now somebody said that they used to drive a very nice car and everything. So everybody see them, everybody will want to them. One day they drove a raggedy car, nobody waved. So which means they admire your car, not you. So that's something we have to read, because sometimes we are trying to impress people. You have to be careful about what do you need and what do you want. What are your wants? I'm not saying that you should not spoil yourself, don't get me wrong. But sometimes you need to maximize how much spoil yourself so you don't go into financial trouble. So, we can spend so much time on these because there are so many of them. Because one thing is, make sure when you spend money as well, spend your money first on essential bills. You need to pay your rent or your mortgage, pay for your car, pay for your utilities and everything. The first thing is to focus on that, because when you survive, then you can think about something else. Now, again, like I said, the essential bills as well. Make sure you don't run yourself into a place whereby you have too many, because you can say, well, I'm paying mortgage. But for example, if you are making only $3,000 a month net, but your mortgage is $2,500, you've overdone yourself. Well, it's an essential bill, but when you are taking, that's why we spend some time on taking loans too, because we need to go deeper into that. Because when you want to take a debt, you need to ask yourself, how much can you afford? Does it make sense for you to buy a car that you are paying $2,000 every month on? If you have the money, you can, but does it make sense for you to base on your finances? Or should you buy 2 big cars at the same time? Can you buy one first while you use one, again, being able to maximize? Because you can say, well, they're essential bills. Some essential bills are crossed from need to want, because we want to impress. You need to be very careful with that. They can say, oh, sorry. I need to unlock that. Sorry. Okay, go back. Sorry. Yeah. So the other thing again is paying your debts and everything, your car loans, your mortgage and everything, and your insurance. All of these things are things that we have to make sure that we pay our essential bills. These are where we spend our money. Now, there are times whereby you want to wear nice clothes, have a nice cologne, it's okay too. But let's minimize our need, our wants, so we can be able to focus on our needs and take care of them very well. Because that's one place to spend money. I'm not saying live like a very, very poor person, but don't be extravagant senselessly. Look at how much you make and that. Now the second one I will go to is savings. There are high savings account, high yield savings account that you can have, and I will show you one. I show us one table here, which you will find pretty interesting. One of the things that we have to make sure that we do as much as possible is to have savings. You can say, well, I don't make enough. If you can only save $10 every month or every pay period, do it. No matter how small it may be, make sure you have money that goes into savings, even if it's just because $10 every pay period. End of the year, at least you have $250. Right?
Yeah.
It's something. It's better than zero. So whatever no matter how small it may be, make sure you save money. And there are high yield savings account that you can have. There are CDs. That's again a different topic because you can cover so much on this. They can give you more interest on the money that you are having. Because if you go to some banks, they'll give you 1 cent every month on $10,000. But there are accounts whereby that gives you much interest on your money that you can have. There are some of them. Now, saving for retirement. I know last year is one of them that we'll cover. Retirement is critical. And you can start anytime to be honest, because making sure that because your 401k, your Roth and everything is critical. Because after you retire, you want to make sure you have something to retire. It's very, very important. Kids savings, if you have kids, there are savings accounts for kids, there are 529, the education savings account and everything, things to because some of these things, even though yes, they look at investment, but they are savings for the future too. Because it helps. The last one that I want to talk about, I read this in the book, and since that day it has resonated so much with me. It said one of the challenges that we have is we want to save for a purpose. But the best savings ever is saving for no purpose. Because that's where your wealth lies. You're not saving money because you want to buy a new car, you want to buy a new house. You're just saving money because the money needs to be there. Because there are times in life whereby circumstances will hit you that you need to get money. So when you are saving your money, make saving your money, you have no goal in mind for it. Zero goal. Just save money. Because it's critical. If you lose a job or something, you need to take care of. Some people will say, well, have 3 months of savings. Have unlimited savings. Don't save money because, I want to buy it. Don't save money save for zero purpose. You're just having savings because that's your wealth actually. Your wealth is the money that you save when you need it. Now let me show you something quick here that you see. Okay, this table. Look at this table here. Let's say for every pay period, for people that have 26 pay periods in a year, and which is common to where I work, we have 24. But even let's say this is assumed on 26. If you save $50 every pay period, for 1 year you have $1,300. For 5 years you have $6,500. In 10 years you have $13,000. That's if you save only $50 every pay period. Every time your money comes to your pay account, you save $50 every time. That's somewhat now. If you go to $100, look at what you have: $2,600 in 1 year. 5 years, $13,000. 10 years, $26,000. If you go to 200, in 1 year, $5,200. 26,000 in 5 years. In 10 years, you have $52,000. Now, fast forward, if you can get $1,000, I'm not saying everybody, but again, depending on whatever you can afford. Look at that. In 1 year, you have $26,000. In 5 years, $130,000. Now, in 10 years, $260,000. This is not factoring if you have high yield interest account or savings account whereby you can have interest. This is just a basic of how much you can save when you save money. So that, and like I said, when you're making your savings as well, one thing that I've learned to do is I've created one account that some money goes there. The one does not eat my spending account because I have a spending bank account and I have a savings account. Different banks, so because if you have the same bank, you can transfer it easily. And those accounts, and make sure if you give me a credit card, I destroy it. Sorry, a debit card, I destroy those cards. To make sure that the money goes there, the chance of the money coming out, I have to go through a lot of hoops to get that money out. And the reason is because any money that hits your spending account is very easy to spend. So go to your employer when you are giving them your direct deposit account, create one that even if it's just $50 every pay period, at the end of the year you will see how much you accumulate. It's very, very important. We have to have the habit of saving, and saving for no purpose. Because no matter how much you make, I always advise, even if it's just $10, that's what you can afford to save. Because it's an habit. You know what I've learned is, if you go to your account at the end of the year and you're saving $50, you see $1,300, you feel good, don't you? Then you save more. You feel like, well, I can squeeze more to get $100. Because it's an habit you have to create. Spending is an habit, savings is an habit too. We have to create that habit every single time, because the more you save, the better you become. Many people will say, well, what if I die? And what if you don't die? And actually, if anything happens to you also, that's a gift to your family too. I mean, I pray that none of us will die young. But if anything happens, and you have those savings, and what you leave for your family is debt, what should they do with it? But if you have saved some money, and everything happens to you, at least they have something to fall back upon. Yes.
Yeah. As much as I admire saving, it means when you say you have future, you have something to rely upon if anything happens. But my own concern and my experience, personal experience is that when I save for 5 years, my money is losing value where it is, no matter how the interest they give me. Is it better to invest?
We'll get there.
Yeah.
No, the case is this: there's a place where you need to save. Thank God the US is not a country where you want to lose value. Hopefully, I'm hoping I won't get there. Because unlike in Nigeria, whereby if 5 years ago, if you have $1,000, in Nigeria it has become basically $100. That's how inflation was terrible in that place. But it's a place whereby the money doesn't go down like crazy, so that's a good thing. So, but it's a place, sometimes you need liquid money somewhere that you can delve into. If anything happens, you are not forced to sell your stocks. So you always need liquid money that's running, that you can run into. So if anything happens, you can jump in it, because again, we'll go to investments next one. That's the next one we're going to talk about. Because one thing about investment is sometimes it's on the high. When you sell on the high, you're good. When you sell on the low, you lose money too. So that's one thing to kind of bear in mind. Sometimes you need some liquid money that you can tap into. If anything happens today, you can tap into right away. But your investment, you don't want to keep liquid your investment every single time. Something small happen.
Yeah, I have an experience recently. There was a friend of mine. He has a saving back liquid cash in the bank, and he applied for something from government that he needs the money. So they said, before you can qualify for this, how much do you have in savings? So he declared the one in one bank. But eventually when they replied, they said, you have this so amount in this bank, so you are not qualified. How do they get into that?
No, the government have access to a lot of things in our place. They do. And that's why they can actually garnish your wage too, easily. And if you lie to them, they will know. Because the bank that you are saving money into, they report information to the government too. You cannot forget that. Because if anyone that goes to your account, they know, okay, where is this money coming from because of the anti-fraud and everything, so they can report a lot of things. And I mean, there are things also people do as well as they do in their life, whereby they create an estate and everything, whereby that's a different topic entirely, because you can create an estate for yourself, whereby the money goes to the different places entirely. So you can apply for the government, it doesn't impact that so much, especially when you're getting older.
The advice to spend that money before you can qualify. They say when you have student loan, Why can't you use the one you said to pay? But now, from the last lecture, it's not even wise to pay down the student loan.
Yeah.
It will impact something else.
No, it's not that it's not that you cannot pay it off, because if you don't pay off, you are paying a lot of interest on those stuff too. The most important thing is how do you balance because you need a credit history to balance all the other things. So that's why you have to find a way to balance, because okay, for example, when I had a student loan, I had 6.4% interest. Yeah, the funny thing is, during that period, we had a mortgage of 3.25%. My student loan, and I'm asking myself, why is student loan more expensive than mortgage? That's it. So I told myself, it doesn't make sense to keep carrying that. First, I refinanced with a private company that gave me 4%. And I make sure but that is also eating to my cash flow too. So what I make sure is I have a credit card that gives me credit history. I have a house that gives me credit history, but I paid off my student loan. Because interest it doesn't make any sense. So it's more of strategically balancing your portfolio of debt. You know, how does that sound? Portfolio of debt. So being able to balance that is the most important thing. Is which one makes sense to pay off, which one? Because if you're looking at high interest rate and you keep paying so much interest on something, you need to ask yourself, because at the end of the day, interest is money that, again, your interest impacts your savings. If you have a loan that you are paying interest of $100 every month, if you take $100 and put it in savings, that's the money that you have, that's not going to somebody else. But you have to balance about how do I maintain my high credit score without also paying too much. It's a balance of which one. If you have a mortgage that you have, a long-term mortgage is good for you. And something like that. So, because of our time, I want to go to something else. The next one is investment. Now, from your savings, or from whatever the case is, it's good to have investment. Now, you can buy stocks, ETFs, crypto, mutual funds, bonds, and a bunch of them out there. Again, each of these topics, we'll go through them deeply one at a time. But if you are new to investment, I will advise you stay with mutual funds and ETFs. And maybe you can just say you can do $100 recurring payments to that account every pay period or every month or so that goes in there. And what that does basically for you, it helps you. Yeah, because if you are new, because what happens is mutual funds, ETF, they are a bunch of stocks that comes together. So sometimes if one goes up, another one can go down. It will balance it. Even though you don't, what you get from that is you don't get the benefit of, if one goes very high, you don't get all the benefit of the money going very high. But benefit if also one goes very low too, you don't get the penalty of one going very low. So if you are new to investment, just start with they call it now robo investment, and mostly put your money in ETFs and mutual funds basically. That's how you get, and also because investment requires getting familiar with risk, because investment is a risk. But over the years in America, people that took their money out during COVID completely out of the market, look at how much money they produce right now. So that's where it goes. But the most important thing is if you're not, because if you're always looking at your money and you cannot sleep anymore, stop doing it. But for you to be comfortable at the beginning, start with mutual funds and ETFs. Because that way, it's a pool of investment and your money, your fluctuation is not very high. Compared to one single stock, you can go very high today, come down tomorrow. So those are the things that if you are new to that, yes.
Yeah, one thing I'm looking at with the things going on in this country is becoming more of private companies, and they are working towards getting to government where they can control things that will favor them instead of individuals. How do we do that?
That's an interesting one. The case is, I mean, that's a whole topic. One of the things is the fact that, whether we like it or not, everywhere you go around the world, that's a norm. The bigger you are, the more influence you have on the government.
It's always been history.
It's always been there.
The UNESCO control governments.
That's the way it is. I mean, even, but anybody around the world, it's always been that. The most important thing is how do you make sure that you protect yourself? That's why information becomes critical. You need access to continuous information to make sure you know where to put your money. That's why I said I was talking about, because sometimes mutual fund and ETFs, because the pool of funds is one place to be. When it comes to government and people controlling government are people. People control people. The only thing why again is how do you have access to regular information to make sure that that's why there are some YouTube channels you can, instead of watching different things, you can watch investment on YouTube. You can learn about these things as they go. Getting okay, where should I put my money? Where should my money be here and then? Knowing what to put your money in there, because it's always going to happen. Now, the essence of which happen might be different, but everywhere around the world, people influence the government. And what I've learned is, the funny thing is, stock markets, almost everywhere around the world, you really lose out in stock markets. Even in Nigeria. Nigerian stock, you still make more money on your stock compared to most places. So that's why being able to have information is the king of everything. You don't have information, basically, you're out. Now, real estate investment, you can buy rentals, you can do rentals and everything, you can do that. Or you can, some people are actually putting money to buy real estate properties, and you don't do much with that, you can, again, but it's good to have investment. Somebody said something about, he said, many of us that are immigrants, we do very well, we get good jobs, we get paid very well. We can have savings, but we don't get into the stock market. That's where the wealth of the nation is. You have to get the stock market. But like I said, if you're not comfortable, just start with ETFs and mutual funds. It's robo investing, they will help you invest your money. They will take a very small percentage every time, but it's one place to really start building your wealth too. And also having real estate too. Having your, at least the house where now. Sometimes we look at a house as a place to live. Your house is an investment. Because where many of us come from, once you have a house, you think you are secure and everything and all this stuff. At least I have a house to live. But here, the house you live is not just your house, it's a source of your wealth. Because housing on average appreciates every single time. And that's the way it goes. So being able to see your house as your car is a terrible investment. Depreciate. It took me some time to learn this lesson too. When I learned that, I told myself I don't care what I drive. If I have money, I will invest my money, because your wealth is not in the car you drive. Your wealth is in your real estate, your stock, and your bank account. Like I said, when people look at the car that you have, it's nice, they admire the car, not you. That's the person in the heart.
Most of the time, they don't even look at the car.
So, and that's why you see some, when people are very young people are saying, okay, I mean, enjoy it at the beginning, but be smart in the way you go about it. If you are very young, oh, I'm making money, I'm going to buy Mercedes. I'm not saying don't buy it, it's nice, but you have to tell yourself, number one, can you pay it? And at what expense? And can you maintain it? Maintenance. It's expensive. Again, there are some life insurance policies that you can have too. That is like an investment. They call it universal insurance. But that one, you need more information and to be informed to know whether it makes sense for you. Because some will tell you to do it, but it doesn't really help you so much. So you need to be smart about that.
Can you add, I think it would be fitting for retirement plans too.
Yes. I think we talk about that one here.
Okay.
Your 401k and Roth, because it's critical. But I mean, I see it more as a savings than an investment, because even though it's an investment too, it's an hybrid of savings, because if you don't put money in your retirement, you're not getting anything out of it, because you're saving for your future basically, but it goes into investment and it begins to accumulate for you and increases in value. That's what it is.
And I think, just to say something about this saving for retirement. A friend of mine, and we are immigrants. We took care of our parents because they didn't work in the formal sector. But he made a comment, which I argued with him, he said, our kids didn't take care of us. Why do you want to take care of us? You have a good job, you are making more. Why don't you invest in your future? And that burden that you have now, that you are thinking of your parents, or you don't take care of it, so that don't put that burden on them. So I think those are things that sometimes we even our community have to we talk about mutual funds and be able to say, so that the burden, like I will talk about my wife's family. We never said a penny to my father-in-law because he had 2 pensions. But my mother-in-law got to send it. I have to send something to my mother too, but he didn't work in the formal sector. So if we have worked in the formal sector here, where there's opportunity for us to save towards our own, why do we put the burden on our children? I think those are some things that as a community we need to be candid and talk about.
Exactly.
Which we don't talk about.
I agree with 200% on that. I always tell people, I said that I want to be like Abraham, that left wealth for his children, not the one that is waiting for the children to give to them. Because if you look at it, like you said, if many of us don't have to send money to anybody, we'll be doing it. Somebody was talking one day, person was talking about, I said, what you guys don't realize as an immigrant, it's like a debt waiting for me where I came from. It doesn't matter how much I make, percentage has to go there. Because people are struggling. But if we, instead of our children to have the same challenges, how about we leave money for them? And some people are talking about, well, I'm a self-made billionaire. I said, that's fine too, but I want my children to start well. I started terribly. The children have the same start too. But can I put something, can I give them a place to start? And in the future, they don't have to depend on me too. I'm not depending on them. They can enjoy their money, enjoy their life, and live a good life. And because the more money you have, money breeds money, if you use it very well. If you look at the example that we give, the person that says $50 compared to $1,000, how much it grows is different. Instead of saying, if you don't have to send $200 to anyone every month, instead of sending 50, you save $250. It grows faster compared to that. And that's one thing we have to bear in mind, is the fact that we should not put the burden of our life on our children.
Yeah, just to support this discussion, we are so lucky being here. One thing that's always putting burden on us back in Africa is that when you have a kids, they graduated, no jobs, they married, you pay for the marriage expenses, they started getting the children, continue to pay for grandchildren, school fees and expenses. But here, if you cannot take care of me, I'm happy, but you will be able to take care of yourself. So, that's simple. Yeah. So I'm not going to be retiring and continue to pay grandchildren school fees.
Exactly. Yeah. It is. But I think one of the things also that probably, there is a thing about Africa we can talk about different days. We have a dependency mentality.
Yeah.
And that mentality is the worst thing, because somebody feels that because you have money, you have to take care. No, I don't have to take care of it. They feel entitled to your wealth. That's not the way it works. Because what I've learned, I was telling someone, I said that when I was growing up, one thing that I told myself, I don't care what any member of my family has. I have to make something for myself. Because when you depend on someone, you become lazy. I'm not saying that the people whereby in African countries that is nothing for you. Don't get me wrong. Because it doesn't matter how much you look for children, it's nothing. That's a place whereby, but even when you're at that spot, make sure you may need help to get up, but don't have a mentality of dependency.
I invested in some of them, helping them to go to school. They graduated from school. They are still students. I said, no. If I have somebody to invest in me the way I did, I will be better off. Yes. So use your sense and what you have to build yourself up. So then you become somebody that's the one,
If you tell people that, it's a terrible person, it's not giving money. I was watching one video from Tyler Perry. I don't know whether you've seen that, I know they've seen that video. He said he has his aunt. The person said, I want money and everything. The person said, and she said, okay, I'm going to go with a job. She got a job, she won't come to work. She expects to get paid every single time. She said, I fired my aunt. Because that mentality has to change. Somebody can be a billionaire, it's not because of you. You can make your, because some people actually, they have the capacity to become greater. But because they have dependency mentality, they remain exactly where they are. Nobody is born to take care of you. You know the funny thing is, our parents, they can only do so much, but a time comes we have to stand up for ourselves. There are times where you need help to get up. Instead of actually somebody give me crumbles, give me something one that can get me up on. Instead of actually giving me money every time, can you put me on with a job if possible? So I don't have to keep coming to you every time. But when you have mentality, you have to depend on someone, that's where the problem starts. Now, a person can die today. So somebody said that when you go to somebody's house, you want to go and collect money for their kids' school fees, the person died. What happened to those children? Because nobody can tell you what happened tomorrow. The person you are depending upon can die tomorrow. The person is not God. Our source should be God, and we should get up and be, okay, how can I better myself? Not just things like this.
I think in a lot of cases too, a lot of people have that sense of entitlement. Yeah. And then on top of that, a lot of times we who are providers to many don't realize how we enable them to be dependent on us, right? So I think I'm glad you're talking about this because it's so important to not have those relationships where you're enabling people to be so dependent on you to that they don't want to work or they don't want to, make their situation better. But you give them the knowledge and the resources and everything they need to be able to get to where they should be or want to be, but sometimes they don't want to do it because we enable them so much.
Yeah. If you look at our last time we talked about the art of saying no. It's critical to learn to say no because some people, the more you give them, the more they depend on you. Sometimes you tell them no. Now, sometimes I said, my brother played a huge role in my life. And he played that role because of saying no to me. So, that period, we're having one argument and everything, and then he said, no, if you don't go to school, don't talk to me anymore, and I'll give you a dime. That day I was so angry, and I told him, you know what, I'll get a doctorate. And I got it. So when I got it, I told him, I said, you're my inspiration, because if you didn't say no to me during that period, there is no way I'll push myself to get where I'm supposed to get. Sometimes you need someone that will tell you a candid no. And when you have that no, sometimes you may be angry, but let the anger fuel you to do better. Not just you resent them. I think the only one. You can read all you want. God did not bless them because of you. I'm not going to sound tonight. The last one I want to talk about is giving. So can you? I want to talk about giving. Now, things say you can give to God, you can give to a cause, give to those in need. Again, life insurance that you have is a gift for your family members. Same thing happens to you. Now, I want to talk about, because when it comes to giving, one thing to bear in mind is this, is part of what we are talking about. I'm glad we took us to that topic. So people think that, I have to keep giving, and you don't have savings, you don't have investment, because you keep giving and people will tell you, give to God, give everything. It's a lie. So people have the mentality, if I give God $10, God will give me $10,000 in return. God doesn't operate like that. So when you give to God, God will just give and you give measure, present, and you use that to dupe you. I'm not saying don't give to God, but be smart in your giving. I'm a believer in the concept of tithe. I do it. When it comes to giving to people, I give to people, but what I try to also make sure is the fact that whatever I remember, my own 90%, I spend it with reason. I give to people, but let's not, again, when we talk about that of saying no, don't become a God to people. You are nobody's God. You are not their provider. Now, God can put you in a position at a certain period to help them, but you are not their provider. If I don't give them, they will die. You'll be surprised if you die tomorrow, they will not die.
When my dad died, I didn't survive.
You survive. I'm not telling you not to give, but don't let people guilt you into giving. Because the Bible says God loves a cheerful giver. When you give God generally, God doesn't bless you in return.
Amen.
And stop looking at God as if I give God $10 and I get $1 million. God doesn't operate like that. You said something here about, and maybe even this is a topic for a different difference between blessing and a miracle. A miracle, a life that is not a miracle, is on crisis mode. But a blessing is one that increases every time without crisis. So one thing is, it's good to give, don't get, but again, make sure you have a balanced approach to your money. Because as we finish, money is always a limited resource. It's not how much you earn physically, it's about what you do with it. And we have to be wise in how we do our money, because those 4 things, look at every money you earn. Make sure, if possible, something goes into each of those areas. Because again, I've seen people that earn very little money will do something good. Some earn so much money and they have nothing to say about it. Because no savings, no investments. There's nothing that we can't move ahead because of that. We have to find a way to move ahead. Your wealth lies in your savings and your investments. Your wealth doesn't actually lie so much in your bills. You can pay bills all you want. Without saving and investment, nothing is coming. And we have to be very smart with that. So as we do this, any final question before we finish today? Any final question, any final comments? Because money is critical. It is very important. And God made us a steward of resources. We are stewards. And on that day, sometimes you say, God say, no, I have blessed you with the job that you need to make the money, but you are not wise in dealing with that money. Some people are saying, some people are waiting for God to give them $1 million tomorrow. Whereas God give you a job that can net you, eventually, if you invest it and save it, you can get to $1 million that you are willing to God for here. God says, I've given you one. That's why Christians sometimes are praying, well, God did not bless me. God has actually blessed you, but we don't use that wisely. There is wisdom with money. I'm still learning as well because I'm trying to learn more to improve myself. But the business that I know, I try to make sure I throw something in there every single month because it's free. I love the blessings. Let's just bow our head as we finish today. So I'm going to thank you for this grace and opportunity. We've learned something new. We pray that it will continue to be in our mind. You will help us to take care of our credits and also to spend our money wisely. And you will help us, you save us from the fraudsters. The grace will be sufficient for us. In Jesus' name. Amen. And I want to say that if you have any issue with your credits, Tawanda is here, she has a company that deals with that because it's very important. Because if you have any challenges or you have any questions, she's always willing to help. Please reach out to her and you have the information. And if you don't have to reach out to me, I'll give it to you. So please let's make sure we do that. So we'll see you again next quarter to be on health.